All right, 4:30 on the dot. Thank you all for joining me. For some of you that were in the live trading room today, how do you do it? How do you tolerate John Person all day long? Mary can't tolerate me all day long. Anyway, just joking around. Thank you for joining me. Today is our monthly PUG meeting, and we had a couple things to go over. First off, let's get in. If you did not email a question in, and you have a question, feel free to type that in. We'll try to get that answered. It's summertime. What does that mean? It means we're going to make this a little fast-paced, a little chop. And Bonnie, you're a guilty culprit. Thank you very much for being here. Hopefully I'll make your time worthwhile. The purpose of PUG meeting, and for those that don't remember, PUG stands for Person User Group. This is not a one application or software specific meeting. This is about the indicators that I have and on the various platforms, be it Genesis, be it TradeStation, be it Thinkorswim, and or be it on HGSI. And today we had a couple questions on to revisit, which isn't part of PUG, but I didn't mind going over it. We did an annual physical class just a little bit while back in May, and we redid updated the Razor Focus, which was a class we did in January of 2020 on trading systems in the SPY. We did an algo and added an E-mini S&P and a Bitcoin. So I will revisit those performances, which is nice because for those that did take it or have that or maybe did not fully implement them yet, it's nice to revisit their performance. There's nothing to really go in on the algo side of things at this point in time, but we were going to address that also. So before we begin, please take a moment to read this important disclosure. Trading involves risk of loss, and I think we all are aware of that. And one of the make mentions, I always like to give credit where there's credit due when I can remember which individual it is. And if I don't get the name right, please correct me. But I do believe Jaron in the live trading room asked me to revisit a couple announcements, and these are our upcoming events. We have a 3-session workshop. It's not a 3-day, it's a 3-session 12 to 2 during market hours during the summer. It seems 12 to 2 in that particular week, there's not a whole lot going on. It won't be a mid-session. We seem to be dying out midday. We gap up, we gap lower. So I felt, you know what, if we're here, let's work together. And we're going to revisit a workshop specifically targeting volume analysis. And if you're interested in that, you can go to the Person's Planet website, and I will post the link in the room. There's the link. Basically, the curriculum, we're going to talk about a few items. We're going to show you how to build your own little indicator with on-balance volume. Many of you may already have this with the TradeStation function, but we'll put it together so that you can use this in Thinkorswim or any other platform that you may have. I'll explain why I don't even use volume histogram bars except for maybe certain occasions. I'll tell you guys right now, I do look at a volume histogram maybe to see if it's an upside move, but or a downside move on heavy volume. But we have better tools nowadays, especially on TradeStation with the radar screen, which I have a question on today to get to. So I will answer that question and not keep anyone at bay with that answer. Also, how to set up a little filtered criteria on Thinkorswim. And one of my favorites that is using end-of-day volume combined with breadth and relative strength readings. And we can put that together on TOS. But that's our curriculum. You could read that and on your own time. I don't want to get much more into it. But also, we're going to do something called a 2-day seminar. It's a Friday and a Saturday. And it's live and online. So some people that may feel comfortable going out into the world at the end of October, it's October 22nd and the 23rd. It's going to be right down here in Florida. And yes, the good news is Captain Charlie Reef Grill is still in business, operational. So we generally get a chance to go over having the best, greatest, bestest fish place in the world right here in Juno Beach, Captain Charlie's Reef Grill. So if you're thinking of coming down, great. If you want to attend the class, we're going to do live trading setups with my account on Friday, talk about things on Saturday. The curriculum is also on the website. That's our special announcement, and that's what we've got planned. All right. It's not the end. It's only the beginning. So let's get back and talk about what we need to talk about today, which is where and when are we absent? Speaking of volume, when we sent the email about the volume class, we came up with a question. You don't use the volume histogram. You use, what is the better tool I use? It's real simple. I put together this column right here, today's volume versus 10-day average volume. And that's, if I ever do use a volume histogram bar, it's just to look at, is the volume today, and most platforms, it's really easy to set up. In fact, that it might be where people go, wait a minute, I don't need to learn this, I'm out of here. But bottom line, on TradeStation or any program, just add the study. So here we're just going to add a study, and the study, we're going to bring that box so that you can see it. And again, go to V for volume, and as you can see, there's a few little volume here, up, down, calls, puts, volume. I'm just looking at volume. I'm looking at histogram. There it is. Now, sometimes, by the way, not to denounce any one platform, but sometimes volume, or at least you see these huge volume spikes, that might not be real. That could be a misprint, and TradeStation, I have to go in and run the cache, and it might not be a real print. So bottom line, what I look at, rather than looking what some people try to teach people, is look at the volume trend of the market on a histogram. And a lot of times you'll find the opposite with the volume trend of a histogram than on balance volume, and even my own volume trend tool. And that's one of the things that I think that volume histogram, why I don't use it, except for maybe saying, hey, was this volume great? Was this a big volume breakdown, or was this a big price move on big volume relative to past volume? And by the way, this is, I don't know how it came up, but this is Invite. Invite is, we had stalked that trade for a little while. It was, I think we were looking at that in the trade room. We got out. It's, I don't know. It might be another favorite of Reddit Wall Street Bets. I think it is. It's also a stock, I believe, Kathy Woods, I call her Joan of Arc, had in her ARC investment portfolio. I don't know if she still does. We have noted that there's nothing really spectacular that I wanted to be a part of this trade. Because why? Well, higher time frame volume trends don't look rosy. In fact, they look ugly. And I always teach you guys, and I teach myself, and I try to practice what I preach. Start left, work right. What does that mean? Look at higher time frame and then go down to short-term time frame, and then you'll be able to determine if there is a strong trend or not. And once again, as a disclosure, not everything that I do works out well. I mean, but, I don't know of any system that's 100% perfect, but I do know it gives me a better edge and a better odds of success by looking at what the longer term trend is. Because if institutional traders feel that there's value in a stock, they're not going to get out. They're going to buy dips over time, and the market's going to trend higher. In this case, my volume indicator tool starts to show momentum of volume weakening as the price is going up. Candlestick analysis would show you that these long wicks, they're called tails or shadows, as we call them. The long shadows was showing that there's a lot of price rejection. The momentum of the volume's declining when the price is rising, making new closing highs. That's what the green bars show. The green bars only signify that the market closed greater than the open. If this red bar shows that the market closed less than the open, you can see that this is a new high closing price basis. If it's so strong, why is the volume on that histogram declining? The momentum in terms of percent change is dissipating, which means it's not a strong volume. It's not a strong contender for a good uptrend. It's not healthy. And so anyway, as price starts to rocket back down and you start to see a rollover of the moving averages, you see the market doing what? The moving averages are no longer acting as support. The market is acting as resistance, and the momentum of the volume really picked up. That's on a monthly basis. So, I mean, this is not a stock that I would look to bottom pick until possibly we get a key reversal, a buy signal, or improvement on longer term volume. Now, longer term volume has to start from somewhere. It has to start on a 1 minute basis. It starts on a 5 minute, then goes to 15. So sometimes you go left to right. Is Invitae starting that ascent and finding support? I would argue that in this case, looking at even starting with a daily chart, if it is, there's a moving average. There's a little bottoming action here. The relative strength and the volume tool suggests until the momentum on a downdraft, until the momentum of the volume improves, this is not a stock. I mean, it's going to take some time before it finds some buyers. So to me, where I look at the difference of volume trends is there's several tools. And I think that's one of the greatest things about having the ability to do an extensive educational focus using 6 hours, 3 different days to break down, hey, how are we doing this? What's the better tool and what do you use them for? And defining why does one work sometimes and one doesn't work at other times, such as on balance volume versus my indicator. Sometimes you see on balance volume breaking out and it gives a great setup for a buy signal and it looks like the market's moving up. And then as you see, like another day or two later, everyone's thinking this is really good, but the momentum of the volume starts to turn negative. Anyway, so I just tend to trust my little volume indicator. But what I think is important and what I do in the market a lot of times is I compare current volume to past 10-day volume. And therefore, I don't look at as often ever anymore. Very infrequently do I ever look at volume histogram. In fact, I could do this one of two ways. I could take time right this second to go to studies, and we go to edit studies, and I will bring this box back into sync so you can see what the tools I have. And I can just go to remove this because we need those thinking histogram bars right now. So anyway, I can clean up that, or I could have closed out the workspace entirely, just close the workspace, and then would ask me, do I want to save any changes? Hit no, because there was one thing I changed. I added a study that I don't want. So I don't want to save that. All right. What I'm looking at in terms of volume trades is I want to see is a market up or down on big volume. Today, it's interesting. Twitter, and in one of the comments, if you were in the live trading room today, I made a comment that I said, this is a very untrustworthy market in the sense that what was up yesterday or up last week is down this week. And it makes it kind of difficult to trade in a I would have to say, a lackluster non-trending market. And when I define non-trending market, we keep looking at the S&P and the Qs making new highs, and we see a rotation effect that's weighing in on that factor, causing that to happen. The top name stocks, Amazon, Microsoft, and a few of the other great technology names is what's to, and Apple specifically, is what's to credit the strength or the price valuation, the SPY and the Qs. And so when you look at something like this, you go, okay, should you be selling this trade right now? Apple, by the way, just surpassed its monthly pivot. It's at a quarterly pivot resistance. I mean, the quarter just started too. I'm picking on Apple because today's action, while Apple had probably one of the best showings of any stock, up 2.5% of a large cap name. Okay, large, or let's call Apple mega cap, or let's call Apple the only 3 stocks in the world that everyone seems to want to own: Amazon, Apple, and Microsoft, right? It did 122 million shares today. the 10-day average volume is 91. So today's move was not a small move by any stretch of the imagination, nor was it on small volume. It was on excessive volume. And the volume histogram shows that, well, you know, it's not that great, but the volume one day went up. The momentum of this volume indicator is saying, yeah, the momentum went up, but it's not that great. Give this a couple more days, at least 3 days, and you will find if there's people willing to want to buy this stock, or if the momentum is weakening, it's showing that the percent change of the volume trend isn't doing that great. You know, the last time we had a new high in price in the market over here, by the way, a new high, the momentum of the volume was not doing well right here. This was back in April. So new highs in price with weakening momentum of volume is not something I'm wholeheartedly trusting. That doesn't mean I want to sell short this stock, but it does say that there was good volume today. Let's see it's sustainable over time. So when I look at volume, I look at this right here, a couple other techniques that I use with volume. And since we're talking about person's user group, this is TradeStation radar screen. You can create your own. In the old days, before, when I say the old days, 20, 30 years ago, before we put up volume comparing today's actual volume to a 10-day average volume, one thing that we could do was to create, and I'll share this with you. Let's see. Let's go over to Thinkorswim, and let's open up an EQR, because it's the first thing my mouse clicked on. All right. It's a little easier than Genesis because I remember you doing it pretty well. You can go over to studies. You could add a study, and I believe all studies go to V for volume. I'm sure it's V for volume. Volume should be, where's volume? Make the hyper jump. Let's move that monitor. Let's see. What did I do wrong? Just volume. See, I knew that I'd run into this doing this live. Volume average, no. Oh, I know. God, I'm an idiot. Volume is over in the, here we go. You can hit volume average, all right? And so this is one. The volume tool is up on equities. I turn it off. I'm so sorry. I forgot. My bad. In other words, if you go up to the wheel of settings here, the cog wheel, and you go to equities, you'll notice volume shows subgraph volume. That's where it is. I'm so sorry. Hit apply and hit OK. And there's your volume. It's the same as down here. This volume average tool, this is a kind of interesting thing that I actually, it's another one of a John Person thing over there that they use. They put up a 50-period moving average. So here's your volume, and basically this is what I was explaining. Go over here to edit and the length. And if you want, you can just change this over to delete, hit 10, and hit OK. Let's change the color. Up days versus down days would be red and green. That's right out of Trade Navigator, by the way. Right out of Trade Navigator. I wouldn't say ripped off the book, but I'm just going to say right out of Trade Navigator. Let's go with the color of the moving average. You can see the two choices, volume itself, volume average. The color is gold. We can change that color to, go red if you want. You'll probably see it a little bit better, or we can go fuchsia is always a good color on Thinkorswim. Hit OK, apply OK. All right, so now I've got it. All I've done is put down a 10-day moving average of the past volume bars. So this is pretty much on Thinkorswim. This is exactly what the radar screen would show you numerically. So you could see visually per stock, is today's volume greater than the average 10-day volume? And if it's on an up day, it's kind of giving you an idea. You get more buys on heavy volume than you're getting sells below heavy buys, sells 1 or 2 days out of the last 30 days. Equity residential in a REIT has been gathering more volume in the upside over time. You can see the green bar. So one way of saying, is this structurally a sound market to buy a couple things? Is it above person's pivots? Yes. On balance volume does a pretty good job in determining the trend of volume, and you can see that. The PMC reading, and again, is the relative strength improving as this stock is rising, and is the volume. So PMC relative strength is available on most of the platforms that we talk about. And with how do you substantiate a good trade versus a not so good trade? Well, I mean, we have not so good trades, and a good trade is you don't get stopped out. A bad trade is a trade that you let a loser turn into a devastating trade. There is really, if you take a systematic plan, I'm going to get in, it has a great signal, it's got a good setup, but it doesn't work, get out. Don't get married to the trade. That's the bad trade. A losing trade is going to happen. It's okay, as I always tell people, it's okay to lose your shirt. Just don't lose your pants. That's where your wallet's at. We're going to have losing trades. It's a matter of if the trade is going to work out and has merits, we should have follow through. It should have support by other buyers coming into the game, and the stock or the price of the instrument should start to see outperformance relative to the broad market. If you start to get into a trade and you don't see any signs that the clue that this thing's got better volume increasing, it's got, and here's a histogram chart just in by itself. Can you imagine this? Here's people looking at the trend of the volume. I mean, I'm just drawing from the left to the right, and I didn't make this up. You only have 1, 2, 3, 4 bars that exceeded this high. That's it. And I mean, since this point in time, the trend is up. The on-balance volume from this point or from this point is doing, it depends on where you draw your trend line. But even if you draw it from this day here, look, the volume is down, trending down. People probably, if they still use volume histogram, and part of what I would teach on our class is to say, this is why volume histogram, I believe, should be outlawed, because people aren't, they're looking at this, people are still teaching that, oh, it's a weak volume rally. And the truth of the matter is volumes being masked or stolen by maybe perhaps options and again, dark pools, as well as self-clearing within the big institutions like Goldman and JP Morgan. But the bottom line is, if you get a stock using our indicators and you're running a scan and you got a daily buy signal and you go, I kind of like that trade, or at the end of the week, I like that trade. Is the relative strength starting to improve? Is it got decent volume structure? If the answer is yes, then you could look to be a buyer. If the market works, then it shouldn't take out certain levels, either the low for the day, the low for the week, or the pivots and pivot support levels. So bottom line, we do note that, as I want to say, volume is definitely the lifeblood of the market. You can mask it for a minute, you can mask it for a day, you could spread it off a little bit with options, but the bottom line is an option trader doesn't say, hey, I got this idea of this stock out of nowhere. They obviously are looking at the institution participation of that. Somebody, and I'm here to tell you right now, there's insider information, or there's people with better information than us all put together. Somebody might have their ear to the ground that knows, oh, perhaps Pentagon is not going to give an award. They're going to one company. They're going to give it to another company, like Amazon. Like in the case of the program, the JEDI program. Or maybe somebody knows that the USDA or the FDA is going to make an approval or a disapproval. Is that illegal? I'm not sure, but it seems to be prevalent because we see a lot of volume coming into stocks. And then what I do in the live trading room, many of you are there with me and see this, we see volume going up, and then we switch over to the options, and boom, oh, all of a sudden there's good volume in the options. So volume is the lifeblood of the market. Anyway, Jason says he recently subscribed to T.S. Person's Pivot Advanced Trading System is the best guide to the workspace living in the trading app store, the better resources. Yes, on our website, man. There's just no doubt about it. On our website, there's on our website, lots of it, Jason. Thank you. Jared, I already thank you for there's no volume settings in TOS. It's in style, or it's in the, I think I already covered that, right? Did I get that good? I got it. Was that a good recovery for an old man with CRS disease? Fairly good recovery. Okay. In any event, the as we get into looking at different markets and the volume structure, to me, I've always been a big believer in volume, and volume trends. It's important. And so with that said, let's bring in our, hopefully that kind of covers a couple topics about how do you combine maybe some, now I got to go over and remove that drawing. You know what? I'll do it on my time so it doesn't. We're done with Thinkorswim for right now. Boom, bang. All right, done. And I don't want to go through the list with you. Today we had a big sell-off, different markets. Talk about the flip, the flop. We had, by the way, this is a good setup I want to talk about a little bit today. It was in the trading room, and it goes exactly with kind of what we were looking for. We have what I would call a very muted, potentially dynamic setup where the volume trend could be going up. Here's an example of maybe on balance volume with a little false, little zigzag higher, 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 low. I said, here is a little wedge pattern. I said, if Roblox, if it's going to break out, it's in a wedge where it, what did I say this the other day? I said, it's 75% of a wedge pattern usually is the timing of a breakout, but I would say we need, and that's why I made this big, thick dash line in the live trading room. I said, if the market's going to rally, and I just goofed the line up, son of beeswax. Well, if you trust me in my integrity, I drew a line right up against this level of resistance of last conditional change, and it's the white line right there. So what the hell? I'll just remove it. It's obnoxious. I just cheated and highlighted my own work. That's the last conditional change. I said, if this market, the relative strength was improving. My histogram was starting to show some signs. I said, if this market is going to break out and get a close greater than that line in the sand, the old school measurement technique would be the mouth or the width of the mouth of the wedge. You would add that distance. And I even said, if the market breaks out, it's measuring objective from point low to point high, or A to B. Take that distance, add that to the conservative low end of the trend line or the middle of the apex, and then extend up. It was 125, but we need a breakout. We need to see the relative strength improve. The volume is starting to show some interest. It didn't break out. Somebody got their wings clipped. This is another example of where the market, is it a trustworthy market? If you don't know who Roblox is, it's an online gaming community for kids, supposedly kids. They have a YouTube channel. They teach you how to win at games, and then you buy all kinds, and then you get a little Roblox card. And it's pretty much an online gaming community, like crack cocaine for kids, right? They're like, if you're in a soccer mom or you're a soccer parent or a soccer grandparent, you see kids on the sidelines at soccer fields. They all got mom and dad's cell phones to keep them occupied. They're probably using Roblox. What happened today? I didn't get any fundamental news. It's just the market failed the breakout. And probably that's the indicative of this market right now. This could be a dump before a pump. If it is, we should see a recovery in volume. Today, This is not a weak sell-off. This volume was 10 million shares versus its 10-day average is 7 million. And this market just pretty much flushed out a lot of people. If it doesn't hold the weekly support down here, ironically, which is around, this is live analysis, which we would probably cover tomorrow morning. If it doesn't hold that weekly support, the next stop would be right down here around 70. That's a big old wipe down. And that's where I think today's action in the market, I don't want to underscore this market because it's been a very challenging, dynamic bull market. And, you know, one of the things that I think has been helpful for some of our positions and picking stocks. Now, I'm not by any stretch of the imagination. We're not long Microsoft. We're not long Amazon. Those seem to be a little bit, to me, a little overblown. But we did pick up and some good scaling in on, and many of you can read the newsletter. I don't need to brag about this, but we got lucky with a pullback in GDXJ. It ain't a winning trade because we're still in it. It's just going in our way on an average price. EQR, equity, residential. Same story there. We just got lucky. We're not out of the trade, so it's not a winner. TJ Maxx, same thing. Kimberly-Clark, it's a partial position, but it's going our way. What is the main driver of buying some of Johnson & Johnson? Been in it forever, not losing. We were in it, got out, made money, got back in, and we've been just sitting with this thing watching paint dry. There's one thing in common you will find that all of these stocks have. Start left, work right. Look at the trend of Johnson & Johnson. If I lied to you and said, I'm going to click this on and off, and it's going to look, it's the same stock. I'm not going to do that, but interestingly enough, look at the monthly trend, right? And you'll notice that while the volume has started to taper off, it's because price wasn't moving, right? But look at the price to the moving average relationship. We're not in Twitter, but it's the same kind of thing. We've been talking about, we had a little trade in Twitter, a 70 strike call, and I told everyone to get the hell out of Dodge. That was about a week and a half ago, was it? Anyway, Kimberly-Clark, I should get that. That's not in the portfolio anymore, so, or in our day trading room. Kimberly-Clark was one of the exceptions. It's in a monthly buy signal. It pulled back. The near-term volume is price is rising. And TJ Maxx, same story. Longer term, price is rising above rising moving average. Equity residential, well, there's the story. So one of the common denominators that I look for is, again, just to tell you, how do I use my indicators in picking out stocks? I run my scans on a weekly basis. I'm looking for PPS buys. I'm looking for high closed dojis. I'm looking for stocks that have good longer term momentum, positive volume trends. And that's how I put together these stocks on a day-to-day basis or week-to-week basis. All right. That's for starters. All right. Enough of that. I just wanted to say, hey, listen, we've gotten a little lucky on some positions. It has been a very, I'm going to tell you, this is a challenging market. So if you're a little ahead, a little behind, you're flat, you're up, that's pretty decent. This has been a very challenging market in the sense of we don't know, and I'm not going to get into the fundamentals with Jerome Powell's testimony today. That's not our purpose of Pug User Group, but you know, we get a lot of signals like a buy signal, and then the market doesn't do anything for 4 weeks, and then a sell signal. And I mean, the overall trend from the higher time frame, if the trend of the volume is down and the monthly's in a negative sell signal, that's no bueno for me. And, you know, one of the things that we can all do is pay closer attention to on the person's user group, at least with TradeStation platform, those monthly signals. All right. All right. I do want to wrap this up because I know that you guys, it's summertime and you may have things to do. This is as you see right down here, revised razor focus, revised razor focus. Been fishing. Where have you been fishing, Ben? Been fishing. Right now, it seems you're fishing for information. It's a moving average that I overlaid on the on balance volume. Texas coast. Man, in order to catch anything, you got to go way out there, man. But anyway, God bless you. In the Gulf, that is. You got to go like, what, 30 miles, 40 miles offshore just to get 600 feet deep? Anyway, I'm just giving you a hard time. Yes, it's a moving average component that we put over on balance volume. It's a long beanbag ride. What Ben's saying, and I know that we probably shouldn't discuss this in a forum like this, but when you have maybe a bigger boat or a center console and it's kind of rough, you nowadays you just throw a beanbag over there. It makes it more comfortable for the older folks so that you don't have to get pounded as you're going out fast. At least in my case, if you're going on a friend's center console that's got some quadruples, 450s, and you want to get there, or the bad back folks, which is synonymous with us older folks. Anyway, bottom line, the model is still long at a profit target, which is extremely bizarre, and the performance looking at and again, the long only, it's only long. It takes long only. So it went long, got stopped out, got out of a long on a max bar yesterday. We're at another weird point. We're at a profit target that the daily had hit, and you're at a profit target that the 60-minute hit, and it's starting to get chopped up here. The conditions of the market, but the performance is, the green dot means new equity high. But the volume trend is starting to show a little bit of divergence, which this is the key of this market. It's a divergent market. Market makes new highs. The volatility won't make a new low. And I'm not going to get into more about that, but this is what we've been talking about, the live trading room. This is the capital king of divergent markets. This is the equity curve for the daily model. It's at a new equity high, and it'll make a newer equity high because this is closed out positions when this trade closes out. The momentum of the volume here is starting to show some relative weakness. The market's getting a little tired. So to me, looking at not just the way that how I use my indicators, but also the things that I notice that when I have a kind of a model that's near a profit target and it starts to show uncertainty, it does heighten my alertness about the marketplace. Anyway, the short only model, well, the market's gone straight up, so it's not doing that well, but you would think it would be doing a lot worse. It just took a little hickey from going short yesterday, stopped out. What I mentioned in the room is that this model, a lot of times what you may find in people, in traders, how many times has this happened? You get short the market, you get stopped out. You get short the market, you get stopped out. You get short the market the third time, little nicks, you go, forget it, and you walk away. And then the fourth trade or the third trade that you said, I'm done with this. I don't want to do this anymore. And the fourth trade you finally walk away from, that's the one that's the big winner. And I would have to say, be a little bit more diligent under a condition that we see in the market right now. And I think it's nice that we bring this topic of revisiting our algo models as well as kind of an eye opener as to, how volume trends and volume tools work. For one, even the short model was short, had a little bit of a profit, gapped up. It did what it's supposed to do, get out with a loss. It's uncertain. In fact, the long and short model, and you'll see the performance here in just a second, it's been kind of flatlined since its equity peak on April. It really hasn't done much. We've missed some trades on this model. Let's take a look at it. When I say it's missed trades, wait for it. Well, it caught one big-ass long one there. It missed this last little run-up right in here. And that might be okay. That could be okay because the last time I've seen to have made a not a fool of myself, but the last time I made mention about looking at a strategy is about making money over time, not about catching every single dip and cranny rally of the market. While I am in the firm belief that the market's getting ready for a correction, one of the main reasons is this is a newer high in the price. I'm sure you all will agree to that, relative to the high that we had at the beginning of July. while it doesn't seem like it, even the on balance volume right now, which is, again, not my preferred volume tool. This is my preferred tool. We are seeing a divergence over time. The higher this thing's going, it's on lighter and lighter and more negative accumulation in volume. And so what's different about the rally up here for this week? Well, the funny thing is, for the first time in a long time, since the 13th, the volume trend is below now a flatlining moving average. That's kind of scary. That means that people aren't that convinced about, for the first time, buying a dip. If everyone wanted to buy a dip, buy a dip, buy a dip, if everyone's long and there are no buyers left, when the next dip comes, it's not going to be a buying opportunity. It might be a liquidation because people are bought out and they're scared. And that is the whole process of what's called being overbought. Everyone's long. Who's going to buy it? If everyone took all their cash and is in the market, who's left to buy? There's no more dip to buy. The only thing that's left to do is, for those who are long at lower levels, they're selling to people. And when they want to decide to cover shorts, or when they decide to come in and buy, that's when you'll see the market support. But anyway, volume is kind of showing that this, on a 60-minute basis, is, and I try just getting this out of the way, not to discourage you from looking at it, but this market, even up at this point in time, this rally did start to break out on newer volume, and it started right around here on 629 at the end of the quarter. Fund managers on it, and that was the funny thing, because this all happened at the end of the quarter, the patriotic 4th of July rally, and then it happened a little bit follow through. And now, what's causing the market to go up? Not all stocks are going up. We see that with the relative strength. We see that with relative strength in different sectors, and we see that with the breadth of the market, the advanced decline work. All right. Anyway, the purpose of today's PUG meeting is to say, are the strategies still working? Is the market, and so far you could see the performance on what we called Razor last year. In the ES, this model here, interesting. Here's, we left up with the VXX, and I'll bring back the performance summary. This is the page that we gave out in the Algo Physical. You'll say, hey, John, that looks pretty familiar. That looks like you ripped this off from the live trading room. And you almost would be right, with the exception I threw the kitchen sink. There is on balance volume. There's my volume indicator. There's the JP McClellan oscillator. Now, what is that? That is a breadth analysis. There's no strategy on this. This is just information data chart. What does this signify? This is the SPY. This shows the breakdown of everything I need to know about the market. So in the PUG user group, and you want to know, well, what does person use? Well, the first thing I do is I broke down the advancers versus decliners in the S&P 500. I know some people use the tick and the trend, and that's okay, but that's information based on the NASDAQ composite and then the NYSE. Last I checked, no one's really trading either one of those. You can't really trade the NYSE. So I was interested in knowing, what is today's action in the S&P 500? What's the going trend on rallies? If the market's going up and the participation rate's going down, that means the market's being controlled by a few heavyweight, large cap weighted stocks. If in time, 3, 4, 5, 6, 7 days, the market goes up and up and up, and the breadth starts to weaken, it's not a very good positive sign. So again, and even for day trading, when the advanced decline is super strong, I try not to take sells unless they're quick scalps. If the if there's better advancers than decliners, I like to take buy signals, and it kind of helps. So bottom line is, I broke down the advanced decline, and all this is a cumulative advanced decline line. It takes the difference in the ratio between advancers, decliners on an hourly basis, because this is an hourly chart. Just to explain that. We also have the on balance volume tool. It shows exactly what I shared in the prior chart, and this is my volume tool. This is the modified McClellan oscillator. What is this? It's Sherman McClellan's oscillator indicator on breadth using advancers versus decliners and a moving average component. But instead of using, and it was based on the NYSE, I just took his reasonality, which is why I didn't call it something different. It's the JP Mick oscillator, because I used his concept and applied my data or my theories and modified it a tad. So this is basically a leading indicator that shows the market when it's maybe overbought, oversold, and if the market's in an overbought condition, it subscribes itself to being susceptible for declines. That's the theory. The longer a McClellan oscillator stays below the zero line, and the higher the market goes, the worse it is longer term. It's another thing we call, it's another divergence. And as you can see, the market is up. We have McClellan oscillator down, and there's a little bit more to that. Lastly, it's my old mentor and employer, George Lane, who created stochastics. And I always say, hey, listen, if the market's oversold, it's less likely to continue down. If the market's overbought in these relative readings, it doesn't mean the market can't go higher. It means it's less susceptible for bigger breakouts. And right now, we went from an overbought to an oversold, and we're actually in a very neutral position at this around this 50 level. So it'll be interesting to see what happens tomorrow. Anyway, those are the little tools that we use. The 60-minute model, let's bring it back, just made another new equity high, even though it's now in an interesting position. There's a conflict between the razor focus being flat and this 60-minute in a low close doji being short. So it did just push up, and the equity curve here, and again, we did this back in May, but this goes back since November, the trough or the worst part of this. And again, with the futures, problem with the futures trading system is every quarter you roll over. And in this case, our rollover, which was from June to September, left us with about an 8-point premium discount in the market between the SEP and the June contract. Anyway, the long and the short of it is, since we did our class, I believe was our May class, this performance has been pretty good on the 60 minutes. And that's what I just wanted to revisit with you guys. How has it performed? The 15 minutes been kind of, I wouldn't say sucky. It's in a conflict. So depending on your time horizon, 60 minutes short, losing money. 15-minute on this last trade, it's taking heat. 15-minute long, and it could get out in a heartbeat and then reverse and go short. Bottom line is, since May, I think May was over here, June, May over here. It was just sitting. Where the hell's May, for God's sakes? There it is, May. So since May, it really didn't do anything until finally recently it's breaking out on a 15-minute. This is the problem with the market. Let me explain. Why is the performance, it's still lower left, upper right performance making money, but why did it have such a sideways draw? Because this model only trades during US open outcry when I created it. That's an issue because this market has been gapping up, gapping down, and having a lot of moves during the overnight session. It's been kind of tricky. Anyway, finally, this was the Bitcoin model. Here's your daily chart with no strategy. This was the Bitcoin. This is another, well, it left us with a new equity high. And in the market, even though it's had a couple little losers, it's not percentage-wise done bad. This is the 15-minute Bitcoin, same problem. Gap up, gap down, and this one trades 24 hours, but it's just not, I mean, this market's just been brutal. It's had some pretty decent trades. It's since its inception in May when we released it, let's call May right in here, it's still up, but it's in a little drawdown. Why? Well, let's review. It had a big old trade. It was short. It had a spike out. It would have caught that, but the volatility spiked that market out. Here's your orange. There's your stop. It's had a couple decent trades. This market hasn't done anything. So when looking at strategies and looking at systems, it's kind of like, all right, where are they relative to the overall market, and what's the market been doing? And that's the whole thing that's neat about looking at strategies, is looking at the buy and hold relationship. And if your expectations are greater, I think I should be making money, and I think I should be making more money. And you say, well, what has the market been doing, and what is the condition of how it's been doing? I mean, from one day to the next, a gap lower like this, that's pretty, I mean, no offense. I mean, you know, from 29-ish and change down to an open print of 26, 27 on a ETF. Those are some pretty big moves, kids. So again, I think that the work that we've done, the one thing that you can surmise from this session is the stuff still working? Do we need to find something new? I'd say and argue, yes, the strategies are working. Do we have to search for a new strategy? No. I think what you need to have is a little bit of patience, something that, and it was, as I said earlier, in the live trading room on Louis Rukeyser, there was one of the elves. His name was Marty Zweig. Marty Zweig, if you remember Marty Zweig, I don't know if he's still alive. I think he passed away. And I wouldn't think I know Louis Rukeyser. He's in the big brokers lounge in the sky. He's up there with George Lane, I'm sure. But one of his rules was, you know, you shouldn't trade all the time. And this is the epitome of summer markets. And it's not just a summer market. Volume's tricky. Markets aren't behaving. We have a lot of indecision on where we're going with, I guess, the big concern is inflation or non-inflation. The key word, buzzwords, transitory. We've been listening to this word now for 4 whole months with no sign of relief. Transitory. What is transitory? 4 months, 6 months, 1 year, 5 years? What's transitory? And again, it's a perplexing scenario. With that said, I think that's why we get markets. And by the way, we have this other measurement of value in equity trading called PEG, price to earnings growth, or PE ratios, price to earning ratios. And a lot of stocks right now are at perplexing levels. Anyway, it makes it an interesting game. And we have certainly interesting times. We're trading in a pandemic market, in a globalized market. And what causes markets to go up so handsomely, and what causes markets to all of a sudden be yesterday's hero and then today's zero? Like, for example, Bitcoin. Governments take actions. I mean, everyone thought that this market was the greatest thing since sliced bread. Consecutive rallies, market would try to test the highs. Was that a message? Hey, something's wrong here, gang. Market's trying to break out. And every consecutive rally, by the way, here's another divergence. Here's a closing high on a daily basis in GBTC. Look at the momentum of the volume making consecutive lower highs. So bottom line, I think, is there a need, and is there a case that the person's indicators don't work? No, I think we need to maybe come to these pug meetings and say, are they working now? What's the market doing relative to the indicators? And that's what I like to do. And I think that was a good case today for a question that someone said, hey, would you revisit your strategies? And I think I even said today in the live trading room we would do that. In the case of Bitcoin, the most dynamic, people were calling it up there when it was near $60,000. You know, they couldn't understand it. Well, bottom line is, you know, when the market started to break out, it was on some very strong trending, very strong near-term trending volume. When it got up to that high, it made a newer high than the preceding high, which was back in January. February's high was higher here. Why was the rally on a new high price? On weakening volume structure. Interesting, right? So the question is, here's a case study. So do you throw this stuff out the window when you see Apple or Google or Amazon or any Microsoft or any of these? You say, oh, it doesn't work for that. Well, give it time, because it may. Don't be complacent and follow up with it. So we will see some, believe me, there is one thing that's constant about the market, and that things change. And people's buying habits change. People's opinions change. And something, as I always could say, is an easy market analysis is real simple. Nothing goes up forever. It does change. With that said, thank you for joining me today. Well, there's one thing constant in this world, Andy, as you said, it is change, and it's death and taxes. So that's another thing. Jared, I thank you very much for your participation. Jay, thank you for your comment. You love the Razor 2020. What was wrong with the... I always adjust the ATR. What else should I adjust? Jay, there wasn't much to it. You want to, good question. I wish I saw that earlier than now, even though that was only 11 minutes ago. What else? George Valle, thank you very much, my friend. I know you're down in Miami. Hopefully not everything's well down there for you. Just feeding you. Oh, man, listen to you, Jay. I miss you, Jay. In any event, I think we had some good participation today. I thank everyone for joining. I just wanted to make sure that, you know, we put out, I think I'm fairly transparent. I'm very transparent. I like to be. If I'm not, it's because I forgot something, generally speaking. Bottom line, right? That's why even in the advisory service or the newsletter, a lot of people ask me about, you know, what did you do in the newsletter? Where do I, you know, how do I read this? You know, it's real simple. Here's the newsletter. And every week I put this on usually Sundays. If I'm early, great. If not, before Monday's open, I put the market, I put orders in, it's pretty clear, add 50%. So if you get like $3,000 that you want to put towards a stock or a trade per stock, divide the $3,000 divided by the amount of shares, or 5,000. If I say only buy half and you're going to put 5,000 into the trade, and it's a $50 stock, so you would be buying 100 shares, right? So you would only buy 50 shares at one price and then add 50% on the other half. Here's where your entry is. There's where the stop loss is. There's my first target and my expected hold date. I mean, gold miners might be a lot more than 54, and it might be a lot sooner at 54 than October 15th. Bottom line, I pretty much put down what the hell we did in the prior week. I put down what our current positions are. And win, lose, or draw, it's pretty much in a Excel sheet every single week we update it. Red is not good. It's a loser. Green, good. Black is open trade. Whether it's the actual longs, we haven't had any opportunities that I've taken in shorts this year yet, by the way. Interesting. And that's another factor. We've used a lot of the positions you see, this red means we used options for hedges. And so we have, as far as option trades in the newsletter, a few on, not doing good. And a lot of the positions were used in options as hedges. And that's where you can find everything in regards to the newsletter and how we do it, which, by the way, current positions, will update this because, if I may be so bold to say, junior miners, we added to that position. Equity residential, we added to that position yesterday. Kimberly-Clark did not get down to that level. And Johnson & Johnson, well, we're in a full position. And we're in at 67.03. And there we'll probably raise that stop because that's a stupid place not to trail a stop. So thank you for joining me. I hope that was instrumental in how do I put it together every week? Do I use my own stuff? Do I believe my own, as they say in the old days, person, you believe your own BS? And it's true because so far it's helped me and it works. And that's the bottom line. So thank you for joining me today. Everyone, Julianne, God bless you. Give your mom a hug and bless your dad. And I hope everyone's well. Thanks, everyone, for joining me today. And amen for that, right? Been fishing. Good luck. Don't fall asleep in a beanbag, pal. It's grouper season down there, kid. It's grouper season. Grouper.